crypto's a fundamentally better way to hold and move money. Like it just is. It's a superior technology for fixing a lot of these problems that some of us have literally built companies trying to solve. That's Ryne Saxe, founder and CEO at Eco, a stablecoin liquidity network simplifying on-chain transactions. In this episode, we explore Eco's rise, key hurdles faced in 2023, and the bold steps they took to pivot from an app to a liquidity network today. Ryne breaks down the future of stablecoins, the role of user experience in building products, and the evolving regulatory landscape for founders. Season 2 of Stableminded, a worldview of stablecoins, is powered by MuralPay. MuralPay enables businesses to scale globally without the hassle, transforming how companies manage payments across the US, Europe, Latin America, and Africa. Their platform and API powers customers like Opera.com and Eco, both who join us in this season among other global stablecoin apps. Mural supports stablecoin payouts, local currency off-ramps, embedded compliance, non-custodial wallets, and virtual accounts for USD and Euro collections. This season, we're joined by Mural's founder, Sinclair Tofa, to hear more about their plans for the future. Thanks for listening. All right, Ryne, how you doing, man?
And I'm doing great.
Thank you so much for joining us. We have a lot to talk about with what you're building, your background. You've been doing this for quite some time. Before we started pushing record, we were already getting into some weeds. So why don't you give us a quick intro on yourself and what you're building, and then we'll get into some background.
Yeah, personally, I'm Ryne Saxe. I lead Eco. It's been around a little longer than a lot of people realize. I think we can get into that history in our conversation, but we've always been in sort of the stablecoin space, right? How do we put stablecoin in people's pockets? How do we make this stuff flow? That's the easiest path on chain for a lot of people. If you're going to bring people's money on chain, if you're going to bring finance on chain, probably not going to happen psychologically for a lot of people, like through Ethereum or Bitcoin or some other asset right away. Probably going to happen through dollars. And so we've kind of been following that train for several years. And we built to the app layer, we'll talk about that. We built to the infra layer, talk about that. And that journey's led us to where we are now, which is back on chain. And Eco is basically just a sort of an interoperable stablecoin liquidity network. And we want to standardize the user experience for basically any action on chain. We think that any action on chain should be a one-click stable send. You can hook into whatever you want to do at the endpoint, but that's the most intuitive user experience. And that's the user experience that we make possible. And so looking forward to getting into it further.
Yeah.
Where you want to zoom in.
Absolutely. Let's start a little bit toward the beginning phases of this. When I think about Eco, Eco's been on even my radar, just working in the crypto space for many years. The last year or two, you've made some pretty significant pivots in terms of how people should be thinking about what you're building and the different phases of growth and really learnings you've probably gone through in that as a founder. Take us back to really where this conviction started. I think a lot of people now are like, stablecoins are the future. Obviously, this is the way money should move around the world. Many years ago, when you first started doing this, not many people might have thought that. When did that start to become obvious to you? And yeah, let's dive in there.
Yeah, if you go back to the very beginning, everyone that had anything to do with starting Eco in the early days had some background in the world of payments. That's really important here. We all believed in crypto for our own reasons, both practical and I think more ideological. Like a common denominator is like, okay, we know we know how messy card processing is in bank transfers. We know like a lot about why, and sort of how intermediated it is and where things sort of like cause user experience slippage. Crypto's a fundamentally better way to hold and move money. Like it just is. It's a superior technology for fixing a lot of these problems that some of us have literally built companies trying to solve. I like to say no one gets into payments on purpose. Everyone gets into it accidentally. You start a company, you start dealing with payments, and then you just a lot of people start payment companies as a result. You build payment tech. I think that it was just obvious to us at that point in time that crypto would be that technology. And the question became, how do you introduce it to the world?
If we can maybe push into this a little bit, maybe for you or part of the team, based on where you all were coming into the context from, what problems payment-wise did you experience that, I guess, led you into doing stuff on chain?
Yeah, most of us were coming at it from a card processing perspective. And I think a lot of consumers don't realize when you swipe a card, there are a bunch of intermediaries that pass that data. And there are fraud checks, there are identity checks, there's fee routing. Basically, that fee gets split a bunch of different ways between the banks that participate, between the card networks. And from a ubiquity perspective and sort of a standardized user experience perspective, that actually works pretty well. We all swipe cards, tap cards. really been painful for a long time from the merchant's perspective. Fee structures can change on short notice. Merchants are at the mercy sometimes of shifting requirements from card networks and their banks. And a lot of merchants find it difficult to even get card processing, even in this day and age. And so the merchant incentive for accepting crypto is actually pretty clear. It can drive their fees down. They can settle immediately. Most of them have to wait 1 to 3 business days to settle their actual funds, recipient funds today. And you can actually deal with fraud risk better because if someone's sending crypto, that money is sent, it's validated by the network that the consumer was good for their funds. There's not going to be some sort of like card fraud risk or chargeback risk that the merchant has to price in. And so that incentive is clear. It's been clear to I think a lot of merchants since 2015 that accepting crypto could be a benefit. But until the consumer shows up, until 1 million consumers show up with the stuff in their pockets asking to spend with it, the merchants that really move the needle on the adoption of crypto, we're not going to take on the risk of the integration. And that has been clear since we initially started. And so we started by building a better checkout, like a crypto checkout product. We actually built it. It actually wasn't better. It was the wrong starting point. This is 2017 and 2018. The infra wasn't ready yet. We built the thing that worked and then we scrapped it because we were like, the conversion for this is not going to be good enough. But we learned along the way, it's just like, you got to put the stuff in people's pockets. And that led us to kind of like from a merchant side focus, pivoting the consumer app that we built, which is why a lot of people may know Eco from a prior era. That app was pretty successful in the 2020, 2022 era, because we just learned pretty quickly, you got to put the stuff in people's pockets, then you can get back to the merchant.
So you started with this sort of widget or checkout experience that you wanted to bring all of the benefits that you mentioned on the merchant side, which, yeah, for me, selling Coinbase's sort of payment widget for a few years, like I totally agree with all of those things. But even in like 2021, 2022, still there was that chicken and the egg of like, this is so obvious. And we have a lot of merchants who are wanting to adopt this stuff, but still it's like the payers aren't there and the usage isn't there. So you then decide to pivot into this Eco app. Tell us about maybe the journey of this season. This is now trying to onboard payers. So how did you think about doing that? And maybe start to finish, it sounds like that product is now wound down, but would love to know like what made it so popular? What were people using it for?
Mm-hmm. I still love this product. So I'm excited to talk about this product. I think that it's a product that still needs to be built, in fact. So an assumption that we had in the 2018-19 era, it was the wallets are going to bring the consumers. And then by 2019, we're like, the wallets are not bringing the consumers, right? Like it ain't happening. We're stuck in a UX paradigm that just doesn't work for the average person, And it's still the case. I think we're escaping that just now. But so in 2020, we decided, okay, we know that this is not a chicken and egg problem. You got to put stables in people's pockets. What product experience would do that? It's not a wallet. And so we designed what became the Eco app. And the Eco app did something incredibly simple. It asked the consumer, it asked an end user to hold their dollars in USDC. That's it. That's all it did. And when you hold your money, or when you held your money in the app, it would earn a reasonable yield between 2.5% and 5%. This is a zero rate environment. So that was a real hook for a lot of people. Remember 2020, 2021, real rates from banks were zero. So if you could get safe yield on sort of a different digital dollar, that was a hook. And then we had partners at the spending side. You get 5% cash back if you spend with Amazon, Uber Eats, DoorDash, and Instacart. Categorically, obviously all super relevant, even more relevant, some of them during the COVID era, the lockdown era. And it's this really nice, simplistic product experience. You had one simple balance, no different between checking savings, spending savings. And it was always compounding. The more you spent, the more that cash back kicked back to a real yield earning balance and kind of had this nice snowball effect. And the only ask was basically hold a different digital dollar, right? We felt really good about the integrity of the USDC to offer that to people. You're already holding a digital dollar that you don't really see or touch in your bank account. Use a different one, and we can give you these benefits. And by the way, it hooks up to your bank account. You can deposit and withdraw freely, right? You're not committing your entire life to USDC. If you need to get money in and out of your bank account for different liquidity reasons, you can do that same day, always. And that was the simple ask.
So that resonated. It sounds like people were really into that idea. What were the kind of, when you look at the user base at that time, people who were wanting to use stablecoins for what I think right now we're starting to see way more of, people finally adopting stablecoin balances and accounts that they can spend with stables. At that time though, what was the ICP or the customer profile, if you will, of the types of people that wanted to do that at that time?
It was really generally applicable because, yield was a hook and 5% back at Amazon was a hook. It was just that simple. Now, we had this really kind of nuanced recognition that you're going to have crypto people using this because they see what Eco is. Eco is a crypto project. And if I use this early, I'm early. And crypto people love to be early, right? But you didn't have to be a crypto person. It's a custodial USDC app, right? You could just be a person who's never touched crypto, doesn't want to hold Bitcoin, just download an app, hook up your account, right? And you can pipe money in. And the user experience worked as such. And it was even more powerful, I think, to some people observing in the crypto community because they saw us onboarding non-crypto people into a future crypto path, which made them want to be early even more. Does that make sense?
Yep. Oh,
I just kind of think this nice flywheel effect from a growth perspective in late 2020 through 2021. But the value props were just resonant regardless of who you were. We had an internal points construct. It's actually pretty interesting, by the way. That's become a meta this year, but we did points in 2021. And it was incredibly powerful. And I think the crypto people wanted them badly. So they piled into this app to like accrue points and because they got real benefits from it anyway. And the average person who doesn't care about crypto was still getting the same benefits from it as well. 5% APY and 5% cashback at Amazon is pretty generally applicable to people in the US. And it's like, so the benefits were the same, but maybe you changed like the reason for being and the why, depending on whether someone cared about crypto or not.
So I have this app, I get onboarded. I am using some sort of ACH funding mechanism to send funds into it or something like that. I now have $1,000, $10,000 into this account. It's now actually backed custodially with some sort of wallet tech. USDC is underpinning it. I'm earning on this money. Is all of the yield, the cashback, is that where the points came in? Like all of that was just sort of appeared as points on the front end?
The yield was dollarized and the cashback was dollarized. We just had a points construct on top of it.
Separate.
Separate. And so you're accruing points, kind of your ticket to ride in this future thing, right? Because the design of the app was obviously not to stop with custodial USDC. That's the shallow end of the crypto pool. We wanted to take people, always opt in, but like the 5-year roadmap was take people deeper to become more crypto native themselves. And then, ultimately there's a protocol play here where your points matter and where your points are your early ticket. And as we made the app more and more full featured, which we did, we added a debit card option that you could request if you wanted to spend out of it. We added a payroll connection and we had a lot of people piping payroll into it, which is like the holy grail of a fintech app. Kind of an untold success story about the Eco app. It's a bunch of people who are attributing a portion of their direct payroll to their Eco balance. Obviously you want to incentivize that big time, so that the points incentives would be optimized to kind of the new feature utilization as we added things such as product suite. We added bill pay. We obviously incentivized certain bill payments. If it was like a recurring financial loop in and out, we wanted to own that. And we wanted you always earning yield in between and to automate that in and out of the app as best we could to denominate your sitting balance in USDC in between. And, that's kind of the experience that we tried to incentivize.
You were really early in building that, at least in the stablecoin context. There are now, as people listen to this today, a lot of founders and people who are now trying to build stablecoin denominated fintech apps in some way. And maybe that leads into more of the kind of infrastructure layer that we're moving toward. But at that time, how did you go about accomplishing what you ended up building? I think a lot of people are thinking about custodial versus non-custodial wallets. How do I get a card program on top of this thing? How do I onboard users in ways that feel really easy? Like, would love to dive into any of that. That seems interesting for you, how you actually accomplished that.
Just in terms of like how we built the product itself. Is that what you're asking?
At that time, were there specific partners, maybe even on the wallet side, that helped you do what you did there?
Yeah, so there wasn't background wallet tech yet. We wanted to offer that to people. We wanted to say, well, today someone else holds your USDC. If you want to hold it with certain benefits, tap this button and we'll create an embedded wallet for you. We never got to that point. We wanted to, but there wasn't background wallet tech. Really, the product was made possible by like a really savvy backend sort of bank partnership operational layer, basically. And you kind of, this is where our background was really valuable, right? Like you have to be able, first of all, this was a regulated product. It was a money services, it was MSV registered. We had money transmission licenses. Like you got to know how to build this product in the United States and move money the right way. And then you have to have the background to be able to go to banking partners and get them extremely comfortable serving your funds flows. And we were really advanced in that way. We had sort of 4 critical banking partners in the background serving different funds flows. We had redundancy for them. You want that if you can wire it in, and you have to have a really, really advanced, I think, back-end transfer system as far as your technical layer goes to just route bank dollars in and out seamlessly. And that's where a lot of the secret sauce in the product was. That's where our reputation and our history and our payments knowledge kind of worked out really well. And so basically the back end of the product was an advanced transfer system and a whole lot of sort of work and reputation put into lining up funds flow partners and banking partners as a service partners, such as Lithic, for example, on the card issuing side, and some others that enabled funds flows to happen. And it was kind of omnibus in that regard, but then the front end was just abstracted into a single balance for the user. It's really important, right? They could opt into these different funds flows, these different features, but it never violated this sort of like concept of you have a single balance, like a single spendable balance in Eco, and it's always earning. And that was kind of the user promise on the front end, but that was like dependent on a lot of that operational savvy on the back.
Yeah. That is not easy work to go, especially as a regulated institution. I think from my vantage point, you kind of see there's 2 paths. So you can kind of go down I want to go as a regulated service, get my MSBs with MTLs and go play by the rules of the government. And that is a huge undertaking, as you probably experienced, to do it, especially at that time where very few were. Mm-hmm. Right now, the opposite would just be, I'm going to just give all the custody to the users. They're going to have all the control of the keys and try to make that as easy as possible, which has its own challenges. But that approach that you took, you're getting strong banking partnerships. This is a fully regulated product. In some ways, candidly, I think I wish there were more of that approach going on, but I think you experienced what I think a lot of people now are starting to come out with Choke Point 2.0 and the banking failures and everything that actually happened behind the scenes during that time when I think, fast forwarding to the end here, Eco started to face some significant challenges on that front. So what would just because you were in the weeds at that time, a lot of people building in the space now are for the first time really learning what actually went down there, what happened. Would love your perspective and just how that played out for you personally with the banking side of that.
It killed the product. It killed our flagship product. 2023 sucked. There's no other way to say it. We went into the year with all this optimism, 7 or 8 big things we wanted to build on offense in the product roadmap. We got to do like one of them, and we spent the rest of the year controlling for 11th hour bank requirements. We have great banking partners here. Like there was high trust. I think what a lot of people don't realize is like to build this product the right way, you talk to a lot of your banking partners for months to get them on board with a new thing. So you have a relationship there. There's a contact. There's a team of people that you're working. And our banking partners stayed close and stayed strong, but there were requirements shifting underneath them, right? They didn't just invent this and sort of heap it upon us. What's interesting now is this is becoming salient. A lot of people are speaking up about this. I don't know why it didn't happen before. We didn't speak up much about it. We thought we were kind of like the only ones. And I think that it took like someone ripped the jar open, maybe it was Nick Carter, probably as much as anybody else in the last couple months. And now there's all these people. What's funny is we all know each other anyway. And you're like, oh, this happened to you too? Mm. And maybe we've talked about it over drinks in the background, but no one's really talked about it much publicly. What happened to us is, let me just qualify this with some intellectual honesty. This is a fintech product in the United States, a consumer product in the United States. Those are hard anyway. Okay. Like those are hard to grow. It's a very, very crowded space. It is a big market, but it's a crowded space. So let me just like ground it in some intellectual honesty. Like, of course we didn't execute everything perfectly, but I still believe that this is a multi-billion-dollar product for somebody to build, maybe in just a more favorable environment. And I think we maybe could have broken out in that way had we not dealt with 2023. And what basically happened in 2023 is we had 4 critical banking partners for piping money in and out of the app, depending on what the feature funds flow was. And they just got squeezed. And so we got squeezed. And, what happened 4 times is we were given a week's notice that we're going to turn the funds flow off if you don't fundamentally change the way your product works. And we were able to do that in the back end a couple times with some heroic effort from our engineering team, always over weekends, make sure that money was flowing on Monday morning. But eventually what started to happen is those requirements inevitably crept into the front end of the product and violated the promise of the thing. New terms and conditions for users, constantly new data requirements, no more one simple balance, always earning, new limits imposed on being able to move money in and out. And then the writing's on the wall. It's like, okay, we're being forced to build a bank or not. get the product and get people out of their bank, right? Not round trip. And it got to be so operationally intensive. This is an expensive product to run because we're running it in the regulated fashion, that we got to basically July, August after doing this for 6 months. And we didn't know, it seemed like this indefinite thing, right? Like, are we just going to have to do this for the next year? This sucks, right? We're paying a lot of money to keep this product online. We're trying to just hold our user volume kind of where it is and keep it flowing. We can't invest in new features. We can't invest in growth. And it just felt like the writing was on the wall. And so we decided to wind it down. And so that was our experience. And it's just, it's kind of amazing. It hits in a pretty deep place because it's our flagship product. It was a product that gave us a real taste of product market fit when we really launched it. And you got to give that away. Now, fortunately, I think that difficult decision led us to where we are now, and it's working anew. Obviously, it kind of rips your heart out when you do that. Half the company has to go with it. You wind down all this infrastructure that was kind of your moat, the licenses, the back office compliance and payment operations, and all this stuff that makes it work well. And in the second half of the year was really devoted to that wind down, doing it the right way, making sure that every user dollar exited with support and with enough notice. We gave users 2-3 months of notice. I hate when a product winds down and it's just like, you got to pull your money out next week. So we rolled all that up last year, but it was really just the banking environment that became prohibitive. And I hope that that's maybe changing or will change going forward, because I think that somebody else could take advantage of a warmer environment to build a similar product. That's powerful in the same way.
Yeah. I just feel that level of intensity and emotion that you have for this. Like, I obviously wasn't there going through this with you, but knowing your role in that, I can just only imagine what those Sundays felt like with the engineering team, or dealing with those types of relationships on the banking side personally, and feeling like, there's trust there that is being forced to be broken in a sense. And how do you look back on that now? I mean, especially as we sort of, what feels like, you're on a stablecoin focused podcast, like that didn't even exist back then, I don't think.
Mm-hmm.
The conversation is moving toward a more optimistic, bullish trend. Like, how do you have peace with that season now?
Really proud of the product we built. I believe we built a great product, and it didn't fulfill its potential, but it's still a good feeling to feel like you built a great product. And I think we wound it down the right way. So if we're going to wind it down, we supported users on their way out. We even ran a couple of rewards campaigns on the way out, like exit sooner, because we have to wind this product down. And we had like a couple of raffles for people who exited sooner for a number of goods. We were going to launch this points marketplace where you could redeem the points you'd accrued for certain goods that partners were working with us on. So we had some inventory there. We ran those on the way out. It was kind of fun for people. And I think we saw, the unfortunate effect that I already alluded to is you've got to see some employees out whose jobs are dedicated to this product and go with it. And I think we saw them out the right way too. It was really an amazing moment. I mean, for 3 or 4 months, it's sort of like this dark comedy. Like the whole company is structured, incentivized to build the main thing. And, some people are going to be leaving, user dollars are going to be flowing out, but we did it the right way. And so when I look back on it, there's three things that I do. So I don't have time to stay angry. There's new stuff to build. There's 3 things I kind of take solace in. One is we built a great product. We've done that. That's hard to do. And it's fulfilling for whatever window of time that you're able to deliver it. 2 is we wound it down the right way. 3 is we're back on chain, liberated struggles that we were dealing with last year, and we wouldn't be here unless we had to pass through that.
Yeah, it's just such a wild turn of events. I'd love to move forward and turn the page on this, but I guess one final question for people who are reading this news and even seeing the way that this is referred to as choke point, and might have some skepticism or criticism on if that it actually is. Did that actually happen? Is that actually something that founders dealt with? What would you say to those people?
It happened. You can choose to trust me if you want. You should. I can provide additional data points. At one point last year, all of our banks were changing their master services agreement with us at request from the FDIC, and those were being redlined by the Federal Reserve branch that they were a part of. They said people at those banks told us in 25, 30 years of experience, the regional Federal Reserve branch had never been redlining their commercial agreements, but they were doing it when it somehow touched crypto. This is the lightest touch of crypto. We're talking about custodial regulated USDC. right? Much less some of the other crypto products out there that might have been even more exotic in the face of banking regulators.
It almost felt like the founders who were building it or trying to build it, at this time I was at Coinbase, and it's like those types of companies who were trying to play by the rules most obviously were the ones who got most hurt by that.
I think so, because I guess we thought we were Trojan horsing the system by getting the money out of people's banks, but we allowed a Trojan horse into our system by being dependent on those banks to get money in and out. That was a user promise, right? Like if users were fully ready for crypto, they'd all be piling into MetaMask. They're clearly not, that user experience has sucked. In fact, we probably made it worse in crypto somehow over the last year. We're in the process of fixing it. That's kind of where eco lives now, but that the users weren't going to do that. You had to give them a direct connection where they could, if they had any concern about USDC, they could retreat to the safety of their bank, one-to-one, or the perceived safety of their bank. And we just felt that was the right way to build the product, but ultimately it's probably what also did it in. Although I wouldn't do it differently, because the non-custodial UX just wasn't there. It was the only way to build this product and get the average person to use it. And it was also kind of our edge. If you know how to build a product that way, it's not particularly novel. You just got to know how to put in the work and operationalize it. But if you know how to build a product that way, it becomes a bit of a moat until it's not in this case.
So as you guys transition into what's next and the learnings from those things, I'd be curious to know if there are any other companies or projects, builders that are doing similar stablecoin backed apps and similar to Eco at that time that you think are, admiring their work or doing that in a really cool way. Asking for myself.
Yeah. So the answer is yes. I know of several founders who are doing it. I don't know of a product that I would call out yet that is market ready, but I've reply guide in a couple places on Twitter recently and put out a couple calls to action. Now I'm in DMs with 5 separate founders. I just am volunteering up our learnings from this. It's just a valuable product. Someone needs to build it. We've wound down all of our infra. Not going to be us anymore, but we have a bunch of learnings that I would volunteer to any interested founder who wants to build this product, maybe in a more permissive time and place. And so 5 founders have taken me up on that. I've speaking with them at various stages in the background, and I'm really looking forward to seeing what they can string together. I'm an open book on this stuff. And so those products will come. Then ironically, I just think Coinbase is going to do this. They already are. They just turned on yield for USDC eventually, and they made it, free and easy to get into USDC. And that's the shortest hop on chain for somebody. And now they can deploy Magic Spend and all of their other reach through Base to more naturally transition people to an on-chain native experience. And so there's kind of like this barbell strategy. It's like Coinbase is just going to do it. They already are. That's a good strategy. And then there's going to be a bunch of upstarts that I think tweak that UX. Maybe don't need the full suite of everything that Coinbase is, just to try to target a particular kind of use case niche. And I think there'll be a new kind of generation of these products that are built over the next 6-12 months.
Cool. I'm excited to tease out more of those 5, learn maybe offline who you're thinking about there. But all right, so tell me what's the next chapter for you guys at Eco? Looks like you're taking more of an approach of you like a liquidity network, as you described, and you've built, I think what you've described as a demo app on top of that. Would love to just take us into the future of your mind and how you're thinking about it.
Yeah, this is a perfect transition. It comes out of the decision to wind down the app. Yeah, we just want to help. At this point, nobody doubts the product market fit of stablecoins. We were maybe a little ahead of that in 2020, 2021. Now it's just stablecoins are inevitable. They're everywhere. People are getting used to them, but they're fragmented too. And so we want to basically just make it the user experience for doing anything on chain denominated stablecoins by default. And we want to help stablecoins flow better between chains and apps. Really that simple. It's kind of a hard infra problem on the back end, but it's really that simple. And so it's kind of like the mission never pivoted. We're following the same kind of mission track from 2018. It's just that we've pivoted the product angle big time twice. So we built this. Remember that the point of the app was hold USDC here, and then we'll take you gradually on chain. So we had started to build this on chain, stablecoin routing system. So if you wanted to send your stablecoin on chain with the Eco app, you would seamlessly route it between the major on chain destinations, starting with Ethereum rollups because they were starting to become a thing. And we never got to merge that technology into the Eco app because we wound the app down before we could take it on chain. In fact, our banking partners told us you cannot take it on chain or else we're fully turning you off. So that was really the sticking point. But we had the tech. And so right when we decided to wind down the app, we did 2 things. We started to think about, can we generalize that tech? Because stablecoin movement on chain between just on chain products is going to be a thing. And there's all these rollups. They're going to need to share liquidity somehow.
Can you break that down in something I just really care about for the person who's listening to this who might just be like starting to lose a little bit of what this means, just to really make this simple, like why, when someone thinks of a stablecoin, they might think of like, oh, there's a stablecoin, but we know that there's so much more underneath that needs to be connected. Like, what is the issue that you're talking about there with interconnectivity, and help explain why that's typically a problem from a UX standpoint?
Yeah, I think actually you can relate it to the banking system now. So if I travel to a different country, my US bank dollars don't necessarily work there, right? So now with Visa, now I can spend and I can go to an ATM, but that's a relatively new innovation. 20 years ago, I couldn't do that. So I needed to basically like find a way to get money into and out of their banking system in order to spend local currency. The on-chain experience is not that different today. So there are different blockchains with money kind of like segmented or fragmented between them. It's not that similar from saying there's different national banking systems with money like siloed within them. And you have Visa and Swift, et cetera, as networks that were ultimately built to make the banking system interoperable. So I could spend my money wherever I wanted to. Well, those analogs have not yet been built for crypto. And so, there's Ethereum over here with ETH and dollars on it. There are other blockchains over there with their own assets and dollars on them. And the infrastructure doesn't yet exist to pass those dollars between them in like an intuitive way. And that's just kind of where we are in the maturity curve of the technology. It's okay. It's just the next hard problem to solve. And, we also think we are opinionated on this. So we're not, there are projects that look at like this is called, if you're not familiar with it as a listener, it's kind of called the interoperability problem within the crypto space. And there's a lot of projects focused on that generally. How do we share all kinds of assets between all kinds of blockchains? We only care really about stablecoins because you can just optimize the system differently. And we think better, both in terms of cost of transactions as well as user experience if you are opinionated with stablecoins. And so that's where we live. And we're opinionated about the user experience as well. I think that we've saturated the market of people who are willing to use MetaMask and pay gas. And for the vast majority of people who are not yet on chain and will be doing the vast majority of things that they can do with crypto, we think that those actions should just be a one-click stable send. And you have a spending power on chain. And so long as that's sufficient, you can do the thing that you want to do, regardless of where you live. And so it's just not that dissimilar from saying that Visa eventually like solved the interbank problem of traveling to a different banking system and needing to be able to use your money there. That's very similar.
Yeah. It's almost more of an issue on chain because where physical boundaries might exist in our world with fiat government money, I'm traveling fairly uncommonly across borders. That type of problem doesn't always happen a ton. But if you're living and doing business and sending funds on chain in the digital world, this is something that comes up all the time, like almost every time. And so tell us, how are you? Yeah, what is this sort of liquidity interoperability network? How do you talk about it to a I'd actually love to hear, like, how do you describe it in like 30, 60 seconds to a super crypto forward person in like a really geeky way versus someone who's, like your aunt at dinner and just wants to move money in a really simple way? Like, what gets someone who's really into the tech fired up versus someone who may not be?
Yeah. So someone who's really into the tech, I always start with the user experience. Our edge is we've built infra and we built an app at this point. That's our edge, right? And so we cannot separate those in our heads. As a company, or me as the leader of the company, like, always got to hold those in your head at the same time. When I'm talking to a technical person, I always still start with the user experience. One-click stable send anywhere on chain. On the other side, you can hook it into a thing, a swap, a game pay, like to play a game, make a payment, deposit, liquidity, whatever it may be. But it can always start typically as a one-click stable send. That is the sort of user experience that I want to standardize and I want our network to stand for, right? Okay, what do you need to make that possible? You need basically a massively interoperable pool of stablecoin liquidity. All right, great. What do you need to like activate that? You need a few things. And this maps to our roadmap and kind of like our pieces of the product. You need routes. You need liquidity routes to pass stablecoins between different blockchains, different apps that live on them. You need accounts, our second product, which is basically just like the standardized way of utilizing that liquidity, that one-click send, right? An account knows how much available spending power you have on any connected route, and it can draw from it, route it, settle it to do the thing that you want to do in a one-click interaction on the front end. That's the standard user experience we want to stand for. And then as you get volume flowing, you got to be able to sort of like optimize where you're incurring slippage on cost or user experience. They're overlapping concepts. And you want to try to own more of that liquidity in your network. So you need a really good liquidity model to sort of like further optimize, drive fees down to zero. And if you can own and monetize that liquidity and hold it in, right, between your routes and accounts, then you've created a pretty valuable network. And so that's sort of how we think about it. The dream state is to activate liquidity on the spokes that are in accounts. We call that crowd liquidity. So the dream state is to have crowd liquidity available on any connected route to serve cross-chain orders. And we think that's particularly powerful. And so this is where the crypto people kind of geek out, right? Right now, cross-chain order flow is largely served by kind of off-chain price discovery and liquidity providers. Can we bring more of that on-chain? Can we make it more transparent? Can we make it more competitive? Because if you're making sort of capital more competitive, you're usually giving the end user a better construct, a better price. And can we distribute it? Can we democratize it in a way that the average user holding funds within the network can participate without really needing to be a professional or care? It comes up as potentially passive yield for them. So that's what we're ultimately building toward. And I think that activates a lot of crypto people because they see that as being something that's kind of been like a nascent capacity opportunity for a while. And so that's the way I usually distill it. Routes, accounts, own the liquidity. That's where we're at right now. Routes and accounts are in beta already. There's a couple demo products there. One just called Portal, one called Bend that kind of wink at both those products without fully exposing them. And we'll take those into mainnet production in Q1. And if I'm telling my aunt at Thanksgiving, during this cycle, she's probably asking me how to buy Bitcoin. So I'm probably not even talking to her about this.
Yeah, we can get her started with that and then follow up.
Get her started with that. Really, it can go back to the banking analogy I already used. I can kind of explain, that and fit our analogy into that user experience and people can kind of get it. I think the hook there is like, for the vast majority of people, the shortest hop on chain is to get a stablecoin, right? That's the least scary thing increasingly for people. And if we're making that the easiest thing for them to do, and then they can do what they want with it, then I think that we're delivering something pretty powerful.
Yeah. So accounts, routes, and you call it the third piece, crowd
liquidity. Crowd liquidity. Yep. And activate.
Is that the most difficult part, the third piece in your mind?
Probably, because it's the new thing. It's like categorically new, right? Our liquidity routes are good tech, right? I think accounts are sort of categorically new. We've been building them since last summer in this sort of Bend app concept, but I think that experience is going to become a little more standard over the course of the next year. And then sort of, can you own liquidity in the network and can you activate it? Can you earn yield on that liquidity? I always look at monetizing liquidity as well, because I think that's more durable and scalable. And I think it's more incentive aligned. I hate fees. I hate transaction fees, right? You're just like skimming from your user with a transaction fee. There probably has to be some convenience fee. It should always be value add, but no more than that necessary value add component, or to have it to like not spam the network security component, right? But I hate fees. I think just like fees are like inevitably with any new technology, you're going to commoditize those down to zero, right? It was $10 a trade on E-Trade 20 years ago. Now, like no online brokerage is zero. Same thing's going to happen with sending crypto. And so what you really want to do is have a model. Can you like keep liquidity in your network and monetize that liquidity? I think it's like from a margin perspective, way better. I think it's ultimately more valuable anyway. And that's the way that we think about it. So if you have a bunch of interconnected liquidity across routes and accounts, can you hold it in? Can you activate it? Can you monetize it? Perhaps the alpha is that is our end game. Yeah.
Are you, from a commercialization, go to market, is that the main way that you imagine building revenue for the product? Is the liquidity monetization? I would love to know more about how you, as a founder, are thinking about where does the money come from? Is it sort of earning native yield on the network as it grows, or what?
Yeah. There's a couple of components. I mean, this is a protocol play, right? This is not a traditional company revenue play. This continues to be a protocol play. We're back to our roots, right? When we started, Eco was a protocol play. We graduated the app layer for a while. Now we're back on chain. It's kind of like a new Eco, so to speak, from a protocol standpoint. And so I don't necessarily think of it from like company revenue optimization. I think of it from monetizing that liquidity if you're a network participant. And I think there's sort of like, there's a couple streams there. One is, yes, yield on the liquidity, right? Like more and more stablecoins are going to have sort of like endogenous yield to be competitive. We're already seeing that. And so if you can activate a lot of that liquidity, hold it in, share that yield with network participants in an economically efficient and compelling way, I think that's a good model. There are fees. I said earlier, I hate fees, but they're never going to be zero, right? From a security standpoint and just like a value-added service standpoint, there's always going to be some fee. to send a stable to a particular place, especially if it's a long tail place. And so if you can have Crowd Liquidity activated to be able to serve some of that order flow, then there's a fee-based kind of revenue model to network participants that's actually pretty appreciable, right? Even if you don't have very much money to contribute, if you're able to like recycle that a few times a day to serve somebody's order because you happen to be sitting in the right place, then that can actually appreciate to something that's far superior to like a standard risk-free 4% APY rate. I don't pretend to like promise a range because it depends on where order flow is going. But based on numbers we're seeing on chain today for the liquidity that's serving a lot of that cross-chain order flow, it's far superior. And so I think that those are pretty compelling. And then I think you need like a staking related security model that's also just table stakes at this point in time for people serving that order flow to basically bond against anything going wrong.
Yeah. So you have Bend, Portal. These are sort of like the two main products that are highlighting what you've built on the protocol side. Do you imagine this in like what is the framework in your mind? Are these just like examples of hey everyone, here's what you can do with this protocol versus like your core focus? And how to think about so it is more focused on here's the prototype of what you can do, but the real commercial focus is getting more people to do things like that.
Yeah, that's exactly right. So they're demo products for us that they force us to dog food our own infra, right? So we update the front end interfaces, we update the back end infra capabilities, we optimize it further. And, we can do an event, we can activate it, we can show people that it's this easy, or we can go into partner conversations and like give them a ready-made demo and say, this is the way you can consume it. And this is the user experience that you can ultimately expose. And these are the benefits and the flexibility for you. And so we continue to do that. And I think it forces us to kind of like consume our own infra first, which I think is always a good thing. But the main focus is continuing to develop that routes, accounts, liquidity, backend, and roll it all together into the whole that will be the new eco.
Yeah. I know we're coming up on time here. So just a couple more quick questions, because I think this is really important as we think about the future. When you think about maybe conversations that you're already having or people that might be listening to this, that you're like, yeah, that is who we want to be using this or building with it. What are these types of use cases or developments that are in your mind being built with Eco? Who do you find in the next 6 to 12 months for you target customers that you want to be bringing this to?
The immediate focus is new app chains. Those could be layer 2s or layer 3s. They have a problem typically. Gaming would be a good category. Like there's a lot of games rolling that need like a high throughput execution environment that are doing like a layer 3, for example. But there's a bunch of DeFi applications that will have dedicated chains as well. Unichain is just a harbinger for probably like smaller new entrants that will do something similar. And they just need their own execution environment. They need to own it. They need to optimize it. But then you stand that up, and how do you get liquidity? You got to get liquidity in to do a thing. If you're a game, you got to get people to pay to play the game. If you're a DeFi protocol, you got to get TVL or some liquidity in to serve the protocol. And right now, when you do that, you got to integrate a bridge. And so that's development overhead. And like a lot of the bridges are not as performant as you might want them to be, right? They're not flexible for your requirements. They might have like fast in, but slow out, right? And result in sort of a substandard user experience. And so our routes basically offer permissionless liquidity. You can stand them up when you stand up your app chain. You can opt into the asset you want to settle in. We can pull ETH and a bunch of different stables from a bunch of different directions and just drop it into your chain as ETH or synthetic or USDC, whatever it may be. You can sort of like funnel it into a settlement asset, however you want. And you don't have to put any development overhead into bridge integration or a new interface. You can just opt into this. And we have some liquidity providing partners to like serve liquidity coming into your new chain or your new app. And it's just sort of like a really easy toggle integration with like a distribution partner, like a RAS provider, roll up as a service. And so that'll carry us through. There are so many of these new kind of app chains launching. I hope we don't have too many more general purpose L2s. I'm not sure we need like a whole bunch more of those, but like the app chain thesis, I think, is really sound. And there's a good reason for a lot of special purpose categorical layer 2s or layer 3s to roll. And there are dozens that I'm just already aware of. And I'm sure dozens more that I'm not yet. And so that'll get routes connected on a bunch of spokes. If it's a new app like a game, we want them to integrate accounts too. So then just sort of a standard user experience for moving money in and out, lightweight. And then we'll have a lot of the liquidity passing, and we'll have a pretty compelling coverage. We can take the usual suspect liquidity hubs, the optimisms, the bases, the main nets of the world, and then we can connect them to all those routes. And we'll start flowing funds far and wide, and we'll start optimizing the hell out of it.
Yeah.
But I think that particular kind of target market easily carries us through the next couple months.
And most of those users are non like gaming users, that they might not be necessarily crypto native, or you're still having to hold that sort of onboarding frictionless nature of it? Or are these, at least right now, still fairly crypto forward people?
They're crypto forward people that know they have to bridge funds in to use the thing. And we just make that super efficient with routes. The accounts product we'll try to get them onboarded, but also will better serve the maybe the non-crypto user that wouldn't know they need to bridge into the new thing. But
is the accounts product non-custodial at this point? Yeah. Okay.
Purely non-custodial, aggregate stable balances wherever it may lie. Again, one spending power figure, and you should have to care what the split is, what the basket, unless you want to, what the basket is or where it's split between.
Awesome.
You should just be able to use it.
This was fun, man. I know we're at time, and I don't want to keep you too much longer, but it was really cool to dive into the story of this, how it's evolved, how you're thinking about the future. I'm really excited to stay in touch with you in the next 6 to 12 months, see how this plays out. And you've for the 5 founders who are getting DMs from you wanting advice, I highly recommend that they do. I think you've seen a lot, and excited to watch Eco grow and evolve over time. This was fun.
Yeah, man. I'm so thankful to be on. I really appreciate the invite. It was fun. It was a lot of fun. We've been pretty heads down, so we're starting to talk more. And so I appreciate the platform. It's really good.
Excited to stay in touch with you, and we'll be in touch as this thing rolls out here in the coming weeks. Thanks, man. Thanks for your time.